If your insurance claim has been denied, then this is for you. Welcome to the Policyholder Podcast. My name is Danielle Snell, and I'm the co-founder and managing partner of Elit Lawyers. Each week, we meet with legal experts and industry insiders to delve into real-life cases of insurance denials, discuss common trends and patterns, and talk about strategies to navigate insurance issues. Whether you're a policyholder seeking to challenge an insurance declinature or a legal professional seeking to navigate the complexities of insurance law, this podcast will provide practical steps to help you take that next step. The Policyholder Podcast starts now. Today, we're delighted to introduce Christine Oliver. She's the Senior Managing Director of Ankura with over 15 years of experience in forensic accounting. Christine uses a combination of technical accounting, finance, valuation, and economic expertise to prepare expert evidence and provide consulting advice. She regularly acts as an independent accounting expert in post-acquisition and other contractual disputes, including insurance disputes. Thank you for joining us today, Christine.
Thank you for having me.
Welcome, Christine.
Thank you.
Christine, to start off with, we might begin at the point where we see an insured, a policyholder, who comes to us because typically they've lodged an insurance claim that has been denied. And insurance companies regularly obtain their own expert evidence, and they'll hire their own loss adjusters and their own forensic accountants, for example, and then they'll submit their position, i.e., we decline you cover. But what policyholders do not know is that they too can seek out their own expert advice. And that's where you come in. Can you talk us through, as a forensic accountant, when you would typically be brought in to an insurance dispute and the sort of issues that you're asked to consider?
Absolutely. So one of the typical examples is the one that you've just talked about. So we've had a claim, we've had a denial, or if the claim is complicated from the outset. So I do a lot of warranties and indemnities insurance claims. Those are difficult from the outset, and so they're a really great one as a policyholder to have your own expert from the get-go.
So that's almost preparing the claim that you're lodging to the insurance company, which would fall within claims preparation costs, typically within an insurance policy. So you're coming in order to prepare it and submit it to the insurance company. That's super helpful. So can you talk us through, from an insurance perspective, what sort of things are you preparing when you are submitting the claim?
So it really depends on what is the claim that we're making and under what policy. So if it's a warranties and indemnities claim, I will be doing everything from documenting what the warranty was and what documents go to that warranty or indemnity under the policy. So a lot of those are financial warranties. If they're legal warranties, obviously that's for the legal team to look at, but a lot of them are financial warranties. So, compliance with a certain document complies with accounting standards. So I'll be preparing a whole bundle of evidence, typically under cover of either a submission or my own expert's report, setting out each of the elements that I have to prove to demonstrate that there's been a breach of that warranty.
So do you also become involved to quantify what the claim is? So when I say to listeners that might not know what quantifying is or quantum disputes are, typically the insurance company they might say, we will cover you, but we'll only offer you X amount of money rather than the much higher amount that the policyholder was expecting. And that's where you would come in, would you, in order to calculate what the full losses are that the client, the policyholder, has incurred. How do you go about calculating the losses that have been incurred?
So step one is the policy. So what is the wording of the policy and what does that allow you to recover? Because a lot of them will say you're entitled to recover loss, but each policy will have its own definition of what loss means in the circumstance that's happened and that you're making the claim under. So that's step one. In most cases, not all, but the vast majority of cases, what the loss is about is that some bad event has happened to you.
A crisis,
Typically, what the loss covers you for is what's the difference between that bad event happening and the bad event not happening. So step one is actually figuring out, well, if this fire didn't happen, if this flood didn't happen, if the warranties had in fact been true, what does your financials look like in that circumstance? Do you pay less money for this business you're acquiring? Would you have made more money because your business would have been open? Would you have paid less in terms of costs that you've incurred to relocate your business temporarily or change the way that you're operating because some part of your business is suffering because of whatever this particular event is? So it's sort of that, I'll call it the 3 stages. The first stage is what can you claim for under the policy? We call it the counterfactual. So what would have happened but for this bad thing that you're claiming about? And then we get into the numbers.
Yes. And so what sort of information do you require from your client in order to, once you start, well, I guess for all 3 of those steps, well, the first step you wouldn't need information from the client because you're looking at the policy and what the policy provides. But when you then start getting to the second step and the third step around what would have happened and what their actual losses are, I assume that there'd be an array of material that you'd require from them. What can you step us through the sort of key documents that you start with?
Yeah, well, look, in every case, we're going to be looking at your financial records. So, and I'll call it whatever the most serious financial record you prepare is. So if your business prepares audited financial statements, then I need to see those. If you don't prepare audited financial statements, then probably the most serious financial document you prepare is your tax return. So I'm going to want to see that. Insurers really like those documents. The reason being is that they involve making representations about the financial performance of your business to third parties. So it's not a document that you've prepared for the purposes of insurance. It tells the insurer how your business was performing before the bad thing happened. And that's often a key integer in what would have happened had things kept going and this bad thing not happened. So that's a critical set of documents.
Can I ask, Christine, do you find that you always appreciate sort of, you want to look 3 years behind the date of that, if we said there is a causal date or a date of an incident, do you find that it's helpful for you to, have policyholders or clients even prepare or give you sort of records that are 3 years old or even longer, or what's the sort of the number that you normally?
Yeah, so we would typically say minimum 3, but best practice is 5. Now, you might not have 5. You might have a newer business, or it might not be comparable. Someone else might have been operating it. Particularly now we're still sort of in that time period. We've got some COVID effects. So those COVID affected financials are often not as helpful. But typically we want to see 3 years, 5 if we can.
And when you're analysing the documents, do you often meet with the business owner or the director in order to talk to them about their business and, critical information that you might require?
Yeah, absolutely. Absolutely. So one of the things that's really important, particularly when I'm working in I'll call it a consulting capacity. So I'm not going to, get on the stand and give evidence.
You're not giving expert evidence.
Correct.
That is.
Yep. What I'm really looking for is not just the numbers, but what's the story behind the numbers? What was moving in the business that's causing the change in revenue that I'm seeing? So if revenue's going up, what was driving that? Did you have a particular growth strategy you were pursuing? That's really important information because it gives me more clarity about what would have continued to happen had this particular event not happen to you. So let me give you an example. Let's say that what's causing some revenue growth is that we're kind of just being swept up by the industry. We happen to be in the right place at the right time and suddenly our product's really hot.
Yes.
Okay.
And then something happens to my business. I have a fire or a flood and, my store's closed.
Mm-hmm.
What I'm going to be looking at then is, well, if really what's driving the revenue of my business, I'm then going to be looking at, well, how did the industry perform while this store was closed, right? Whereas if what's causing the revenue growth is something different, we're tracking in a different way to our industry, we've launched a new product, it's really hot, no one else has it, we're growing differently to the industry, like for that policyholder, industry growth is going to give me the wrong story.
Yes.
So it's critical to get behind not just what the financial results are, but what are the practical things that are happening within the business that lead to those results.
Yes, yeah. And often from our perspective, particularly if we have a court case on foot where there are expert witnesses that are retained and they would be called to give evidence in the course of the trial. But typically what's happened is the insurance company has sought out their own experts, but those experts have not met with our client, who is the owner or director of the business, whereas our experts have met with the owner or director. And what that means is that there's a much more solid understanding, because lots of these businesses, would I be correct, Christine, in saying that they could be so different and there's such, intricacies depending on the industry and depending in the type of product that they might be dealing with. Can you give us an example of a real life case where you've had to consider this issue of hypothetically what would have happened had the, incident crises not occurred?
Yeah, well, as I said, it's pretty much every insurance matter. But look, let me give you a pretty simple one. I had one where I was acting for a restaurant who was a policy holder. And what had happened was that they were in sort of like a strip of businesses. There was a fire that had started in the business next door and had completely burnt through
all the other premises.
The other premises in the strip. And so my job then is to look at, well, how would this, because obviously this business was closed for some time, it ended up actually having to relocate because it was going to take too long to reconstruct the individual premises. So, but even that obviously takes time. You can't reopen a restaurant tomorrow. So there's a question of how would that restaurant have traded if not for the fire? So again, it's looking at how was this restaurant trading before the fire. One of the things that made this particular case different was the restaurant had only been open 6 months. And so that makes it a lot more difficult for us to establish how the restaurant had traded. What we were lucky about, though, was the restaurant was part of a portfolio of restaurants, and the restaurateur had a number of other venues located not too far from this particular venue. And so in that case, while we didn't have a lot of information about how this specific restaurant would have traded because the history was really short, we did have history from sort of, I'll call it proxy restaurants. So other restaurants operated by the same person in similar locations that could inform us about how this restaurant was likely to have traded over that period of time it took to relocate.
I was just going to ask you, you sort of referred back that, sometimes you as the accountant sort of get a copy of the policy to figure out sort of the wordings or what's forms part of the loss. Can you walk me through sort of what goes through your head when you are presented with that document?
Lots of things depending on what it says. But most of the time when I'm looking at whether it's a policy or a contract, I never thought as a person who went to university to study numbers that I'd be spending so much time trying to figure out what specific words mean. One of the biggest challenges that I have, or this is probably a lesson for your CFOs who might be assisting you with insurance claims, is that what words mean in a policy or a contract isn't what a technician thinks they mean. So it's not, when I read particularly if they're financial words, if I read particular financial words, they take on a meaning to me because I practice in that area. It's almost a little bit like jargon. Those words have special meanings. Typically, though, those meanings don't apply in the context of a policy or a contract. They mean something more like what they'd mean to the average business person. So, again, maybe a lesson for your CFOs. If you would use that word with your CEO and they wouldn't think it means the same thing you do, in that case, the CEO is probably right.
Just on that, so in insurance context disputes, so do you think that I've been involved in disputes myself where we've had to bring in forensic experts such as yourself, but when there's an issue as to what certain words mean or how they should be constructed or interpreted within the realm of the insurance contract, we have asked the experts not to, in fact, weigh in on that because we have said, look, we think that that's up to the legal experts to put their position forward and ultimately for a judge to conclude as to what, especially if the policy contains ambiguity in terms of there is ambiguity involved. How often would you actually be asked to weigh in on a particular interpretation of an insurance policy versus being asked to stay away from that sort of consideration?
Weirdly, it probably for me personally more depends on my relationship with the instructing lawyers. And the reason that I say that is that you mentioned post-transaction disputes. I do a lot of expert determinations. So as someone who is not a lawyer, I do have training in the interpretation of contracts and I do spend a lot of time, not necessarily with insurance contracts, but with sale agreements, for example, working through what particular clauses mean. So in that context, because I have that experience, and again, I'm not just going to sit there and interpret it on my own, I am often asked to give a view of, well, how do you think that would be interpreted if you had to make a determination on it? Where would you land? But again, it's not just me deciding, of course, on my own what the words mean in that context. Again, if it's a client I've not worked for and I think, for good reason, then again, typically, as you say, it's often we're quite happy to do the interpretation. If you've got any confusion or concern, come back to us and we'll tell you what it means. And that's completely fine as well.
Yes, no, that's really helpful. Moving on to sort of expert evidence, like traditional expert evidence, can you talk us through, so just for listeners that might not have been involved in, say, the court process before, so can you talk us through what happens when you're hired to be an expert witness and from when you first receive the letter of instruction through to when you're giving evidence in the witness stand?
Let me fire away. I think the first thing, to sort of slightly take it out of order, but I think the first thing that people who haven't hired an expert in litigation before have a hard time or take a long time to wrap their heads around is that you're paying my fees, but my primary duty is actually to the court.
Yes.
So I'm fundamentally obligated to give my opinion, whether it suits you or not. Which, as I said, for people that are not used to that kind of dynamic is a little bit hard.
It's a great point to make.
Hang on, I'm paying you. Don't you just have to say the things
but you are an independent expert.
Correct. Yeah. Correct. So, look, different lawyers handle this differently. And again, it depends on what's happened in the background. Do they have their own consulting expert? Have they helped prepare the brief? But more often than not, I will get, firstly, a call to check that I don't have any conflicts on the matter, but sort of assuming that I don't. The next step is typically a brief. Most lawyers who act in this space will know at least, I'll call it, the minimal documents that I would need, so that they're typically in there. Obviously the pleadings, so what the case is about and what I'm being asked to do. And then how expert evidence works is I get asked a question. So the lawyers will formulate some sort of question that's relevant to the particular matter. And then it's my job to prepare a report that answers that question, but very, very clearly sets out why I hold the opinion on the answer to that question that I do. And it's actually the reasoning is much more vital often than the answer that I give to the question. that process, again, depends on what court deadlines we're working to, what work's gone in behind the scenes before the brief comes to me. But there might be a whole range of things that happen sort of between getting that brief and filing the report. I'm often asking for supplementary documents or sometimes asking for what are called instructed assumptions. So those are facts that might not exist in a document and someone's probably going to have to give evidence about them, but they're key integers in whatever the question is that I'm answering. So that's quite typical. Once we've got the report filed, these days mostly what happens, assuming for the moment that I'm acting for the plaintiff, the defense expert will file their report saying all of the reasons why they think that I'm wrong. And then, again, depends on the jurisdiction. I might have the right to issue a reply report. I may not. And then the step after that is, and this is sort of a little bit unusual for a lot of people who've grown up watching American TV.
Yes.
The experts then get together.
Conclave.
Yeah. Conclave.
And that's a new thing that's sort of, or not a new thing, but it's sort of it's a more common thing that I think, is happening and is being called for is the experts conclave. And I think, and maybe you can explain a little bit, from your side of the fence in terms of being an expert. I mean, as solicitors, generally we have a hand in sort of formulating the questions that go before the various experts. And, but, could you walk us through sort of what you find or what you like, what you don't like, or what it entails?
Yeah, so look, I find that they're most effective when the experts are addressing the same question and they've had access to the same documents. And then thirdly, that you've got, I'll call it professional experts on both sides. So people that, really know what it's like to give expert evidence, what our duties are and what we're there to do. If you don't have each of those three things, it becomes difficult. So if different sides have different sort of, I'll call it theories of the case. So one expert's being asked to do one thing and the other expert has been asked to do something different, that can be hard to, well, how do we approach this? Because sort of you're doing something that's not quite what I'm doing and we're sort of talking past each other a little bit.
Yes.
If one of the experts has documents the other one doesn't have, it just makes the process slow and difficult for the expert who didn't have the documents because they've suddenly got to look at them and decide what they all mean. And if you don't have a professional expert on the other side, a lot of, I'll call it rookie experts, seem to think their job is to convince the other expert that they're right, as opposed to our job is basically, I'll call it to minimize the noise for the judge. The idea is to make it as clear as possible.
Narrow the issues.
These are the things that we agree on. It's not to say a judge is never going to weigh in on those, but typically if two experts are agreeing, a judge is going to be very happy to accept that that's where that thing lands. But it's then about sort of making as clear, concise, and as directed as possible. What are the things that we genuinely disagree about? And look, insurance is a place where I often find if you've got good experts on both sides, what often ends up happening is that the experts agree on
tend to agree on most, don't they?
Yeah, and really what it turns like comes back to some of the things I was talking about before. Where the sources of difference tend to be is how they're interpreting that counterfactual. So how, what they're assuming or what it looks like the business would have done, again, but for whatever the bad thing is that's happened. And so where that gets to is, well, ultimately, factually what would have happened is something for the judge to decide. So the experts say, well, if X happened, then the loss is Y. If A happened, the loss is B.
That makes sense. Is there ever an instance where even once those issues are narrowed, because I tend to agree with you, particularly after a conclave and a joint report's prepared, it's typically very helpful. It's helpful to the judge and it's also helpful to both parties involved or multiple parties if it's a multi-party proceeding. Do you find that there can be an instance where one expert is using a specific methodology in order to get to a number, for example, whereas another expert's using a different way to get there, and that can be what the point of difference is, or is it typically not a methodology difference?
Not in commercial disputes, typically, and that's for two reasons. Whether we're talking about loss quantification or we're talking about valuation, method matters less than most people think
it does.
Okay.
That's helpful to talk about this. Why is that? Why does method matter less?
Let me talk about valuations as an example. So I'm going to bore some people, but I'm going to try and sort of keep this high level. There's two really, really common ways to value a business. One is that we take the earnings and we apply a multiple to them. The other one's a thing called discounted cash flow. We model out all of the cash flows and we apply a discount rate to it. Those sound like very, very different methods, and particularly the discounted cash flow looks a lot more complicated. There's a lot more moving parts, but really what's happening is our multiple method is actually a shortcut of the discounted cash flow. There are some assumptions built into that basically means instead of doing all of this, we're assuming, for example, that growth is stable, whereas in our discounted cash flow, we're modeling that out. So where I get to with all of that is
really helpful,
that unless one of the methods is fundamentally inappropriate, and you're probably not there if you've got good experts.
Yes, agree.
It really shouldn't matter which method you're using because the issue that you're grappling has to go in there somewhere. So if the issue, for example, is, does this business spend more than its peers on capital expenditure? In a discounted cash flow, I'm going to explicitly include the capital expenditure in there. In the multiple method, it's actually part of the selection criteria for the multiple because it's one of the ways that it either does or doesn't depart from its peers. So as I said, it kind of goes in there somewhere.
That's really helpful.
So, it matters less than you think it does. There are other disciplines like construction disputes, for example, where methodology is really important. And that does fundamentally change the outcome. But with financial concepts, again, they're often the same theory applied in slightly different ways, making slightly different assumptions. And so, again, you often should come out at a similar point if we're taking the right things into account in the right ways.
Yes.
So it's really so do you find that the discrepancies lie into what you've been presented, which is, maybe some of the data or it's assumptions that you've been provided with? Are they sort of the things that tend to, equate to differing opinions with experts?
Those are the main things. The only other source is particularly if we're talking about something where, say, the business value has been destroyed, or we're talking about warranties and indemnities insurance where the value of the business comes into play. The other thing that we tend to argue about is the risk associated with the business. How risky is this proposition versus other things that you could invest in? And that's a highly subjective test, and it's really looking at, well, how does the market price risk for other businesses like this, and then how does this business differ from those comparables?
Yes.
And again, it's quite, it's not necessarily we get a number at the end, but it's a qualitative exercise about, how is this like these things and how is it not like these things, and what does that mean for risk, as opposed to sort of being able to plug a number into a formula and is this risky?
Are there any examples, Christine, that you can provide to our listeners regarding where you've seen an insurance company that's saying, look, the losses are worth X. The business losses are X amount of dollars, whereas you've been acting for the other side, you're acting for the policyholder, the insured, and you've undertaken a forensic analysis and consider that the loss is actually much higher than what the insurance company. Have you had any instances like that where you've then had to oppose or come up against a large insurance company and put the losses in? And can you take us through an example like that?
Yeah, sure. So look, it comes back to something you said before, right? The insurers have their own experts, but they don't have the story. Right. So typically where that happens is there's something in the financials that paints a certain picture, but the picture is misleading. So, I talked before about different reasons why your revenue might be increasing. That obviously applies in reverse, right? If you've got decreasing revenue, the insurance company is going to sit there and go, well, that would have continued to decline. But again, depends on why that decline is happening. If we go back to the example of it being industry driven, if the industry's turned around, if there's been a change in demand for whatever that product is, that's not a safe assumption.
Yes.
And so often, the insurers, they're commercial enterprises. They're obviously looking for, what's the sensible commercial but lowest way we can get out of this policy,
we're finding,
right?
Isn't it, Jason?
Yeah.
There's always often an effort on behalf of the insurance company that they are going to put it at a more modest rate, still fair in some instances, but more modest. And there's often room there, and the policyholder itself wants to maximise their insurance recovery and wants to ensure that they're able to recover as much as possible. And that's where your work becomes so important.
Yeah, correct. Because, look, one of the things I do like about working in insurance matters is that typically we are behaving commercially. So it's not what you get in some other kinds of commercial proceedings where one or both parties is completely aggrieved, they've lost trust in the other party and they just want to keep going because they want to achieve some sort of principled outcome. We're not dealing with that.
Yes.
Everybody tends to be going into it saying, well, what's the sensible, commercial, rational way out of this? But again, as you say, everyone's self-interested. The policyholder wants to maximise that, and the insurance company is going to be looking for, where are there parts of this claim that are weak, that I'm not convinced about? And that's obviously where the expert evidence comes in, because it's about convincing the insurance company that this thing that looks like it detracts from your claim on its face has another explanation. And here's the evidence for that explanation and why you can't just do this thing that you're
And how do
thinking
you
of doing.
go about, portraying that narrative is just what I think. I think this is it's so interesting to be able to particularize it this way, of that, what you said about the insurance company doesn't necessarily have the story, whereas, the policy, and that's because we've got access to the operators of the business. How do you as an expert go about portraying that narrative?
So typically, look, again, it depends on where the insurance company is and how much of that narrative they need. If it's a singular point, then sometimes you can just do it by, I'll call it smartly submitting the right documents. But sometimes it really does need a report that steps the reader through, well, this is what almost the steps at the start.
Yes, yeah.
This is what the policy says.
Yes.
Yep.
This is what we say would have happened to the business but for the thing that we're claiming about.
Yes.
And this is why. And that's the really important part. It's this is why we're saying that would have happened, and linking that to where there is evidentiary support for that.
And is that this is why, does that most commonly come up in business interruption insurance cases?
Absolutely. Yeah.
Yes. So that's where a company has taken out insurance to protect them from where something terrible happens, and they've, for example, had to close down the business for over a temporary period, and then you come in and you need to then assess what would have happened had they not closed down. So there's this hypothetical scenario, isn't it, as to, stepping through the very factors that you've helpfully pointed out today. Thank you.
And I was going to say, using that example, do you find anything that's sort of crucial from your point of view that you want to be, armed with or see? Anything that makes it, you want to, will make your job a little bit easier?
Look, most of the things that make my job easier are things that I would hope are happening before you need to make an insurance claim. And that's probably a good lesson to take away, is that if you're behind on your accounting records, that's going to make my job infinitely harder. If you are perhaps, if you don't have audited financial statements, and let's say that you're preparing your tax returns in a reasonably aggressive way. And what I mean by that is sort of reporting lower profits than you might otherwise choose to if you made more balanced assumptions. You can't then have the benefit of the balanced assumptions when it comes to an insurance claim.
Yes. Yeah.
Right? So you're kind of stuck, I'll call it, with your company's history. And so, that's fine. Those are all commercial decisions that people make. But if you're running your business in a way to, of course, legally minimize tax, you can't then have the financials presented a different way because it suits you for an insurance claim.
That makes complete sense.
Thank
Christine,
you.
with also there are personal insurances that we all take out as individuals, including home and contents insurance, car insurance, income protection insurance. There's so many. Do you find it more helpful if you're providing some forensic accounting services in a personal insurance context for the insured to prepare a list for you of all of the losses that they've sustained as a result of the subject event, and or do you tend to want to review the contemporaneous records and construct that list yourself? Because sometimes in these sorts of cases we wonder, well, what is the first step with it? There can be different heads of loss, so to speak, and there can be, for example, alternative accommodation expenses, and there can be losses that have flowed as a result of having to move premises and all sorts of things. So would you recommend that we advise clients to prepare their own spreadsheet to start off with?
I would say yes, but don't give it to me is sort of the way I put it, right? And I'd say prepare your own spreadsheet for a couple of reasons. One, I do want the facts that sit behind that spreadsheet. It's going to be a great, I'll call it, discovery process for your clients, your policy holders, about what documents are going to be relevant, because if they found them relevant to prepare the spreadsheet, I'm certainly going to want to see them.
Yes, the underlying documents, that is,
Sure.
Correct. I'm, also going to be interested in what you say the categories of loss are. What I would rather not see is how much you think they're worth.
Yes.
Okay.
Right? I'd rather do my own exercise on that. It just allows me to be entirely, and sometimes I'm going to think of things that your client doesn't, right? So it's quite important that I do that exercise. The other reason you do want to prepare a spreadsheet is, I'll call it, to know whether it's worth it.
Very good point.
Forensic accounting services are not free. And so if you're going to make that investment in terms of maximizing your return under the policy, it needs to be worth it in the context of the size of the claim that you're making.
Absolutely. And that's certainly something we speak to clients about a lot in terms of proportionality of legal costs. And there are legal costs, but there are also expert fees and disbursements and the like. And so we're always very centered and focused at the outset about what is this dispute worth? What are the parties fighting about here? Because even to decide, for example, the jurisdiction that we're going to issue a proceeding in, where we have to have our minds on the amount of the dispute versus the legal costs that will be incurred. There's no point, obviously, in spending an amount of money that will outweigh what it is that we're all fighting about. So that's very important. Christine, my next question relates to technology and lots of our cases these days. There are thousands and thousands of documents that we deal with in the discovery process and then also at the trial stage. Are there any technology tools or software that you use to aid the forensic investigations and accounting process that you go about?
Yes, but it's a little bit horses for courses. And again, there's a question of proportionality. So particularly in an investigation type insurance matter, so, we're concerned that an employee has misappropriated assets or a directors and officers policy, there's often an investigation involved in those. Again, it depends on what the size of the policy is or the size of the claim that's being made against the policy, particularly in the case of directors and officers insurance.
Yes.
What we're going to do.
Yes.
There are platforms like Relativity where we can ingest a whole bunch of documents in there, and it will assist us in identifying what's likely to be most relevant once we train it, what we're interested in. Again, we can't typically use a lot of AI if what we're going to do is going to end up in expert evidence. As I said earlier, when we do our report, it's really important that we explain why we hold the opinion that we do or that the ultimate expert does. If we're relying on AI, we often can't answer that question.
Sure.
So we've just got to use it sort of a little, in a little bit of a circumspect way. But again, it can be helpful. In particular, it's really good at scheduling things, just FYI.
Oh, that's good to know.
If you need to, for example, we talked about, getting prior performance. If you wanted to, say, sort of produce the table of your business's prior performance, sticking that into like a chat GPT or similar, just upload the documents and ask it to do a comparison table. That used to be a couple of hours of work for someone that it's now not. So we do use those sorts of things. Obviously, we've got tools for digitizing documents. There are still some documents that float around that sort of weren't created in a digital environment that we need to interact with.
The one document I always say I need to see manually is the insurance policy.
Yeah.
Just because there are often definitions and there can be the PDS in itself can be more than 100 pages and sifting between the documents. So I must admit to that.
Yeah. I was going to ask you, Christine, maybe to finish up, but it was you hinted on a very good tip, which was, when, policyholders might be thinking about making a claim, sort of having that spreadsheet and going through potential losses. Is there one tip that you can tell our audience about, prior to that even happening, just as, their day-to-day lives, whether they're, business owners or whether they're individuals, something they can do sort of, as a sort of a routine thing, so to speak, just in case the inevitable did happen and they needed to make an insurance claim? What's the one thing that you think that they should just do out of a matter of course or practice just to make things a little bit easier down the track? Touch wood, if it had to go down that way.
Look, I think actually the number one thing is make sure your financial records are up to date. It's, for a number of, I'll call it small to even medium businesses, it does tend to be one of the things that people get behind on in terms of just, I'll call it the day-to-day operation of the business. The other thing that's really handy, and again, this is something you should be doing, as a prudent business owner, is I'll call it preparing forecasts and business plans. They don't need to be the most detailed documents in the world. And again, we live in a world of AI support where AI can help you with this, but having a clear sort of set of contemporaneous documents of, this is what we're intending to do with the business and this is how we're expecting it to perform. One that allows you to make just better business decisions because you've got an idea of where you're headed. That's really good
advice.
But two, it allows me to kind of, present to an insurer, this is what they thought was going to happen, sort of unimpinged by what's happened now. This was their best contemporaneous estimate,
and that would fall as part of the
where
discovery
this
in the
was
case
going.
too.
So that's I'll call it the day-to-day thing. The other thing I would say, and it sort of hints on a topic we haven't talked about much, which is where we're doing investigations. Decide what outcome you want from your investigation from the outset. Right? Do you want to make a claim on an insurance policy? Do you want to seek recovery from a person that's wronged you? Or do you want to seek justice and see someone go to jail? Often those are competing priorities. I'll give you a really good example. There are some insurance policies, particularly say like directors and officers policies, right? They cover the business in a lot of cases as well, but not if that director has committed fraud.
That's right.
So if there's a claim against the business, they want the D&O policy to respond. If that's what you're trying to do, my investigation is going to look very different from what I'm going to do if you want to send that director or officer to jail. Right? And so being really clear, if an event happens, look, if it's, I'll call it clearly an insurance event, you have a fire, a flood, business interruption, those are all pretty clear that that's what you're going to do.
Yes.
But if some other event has happened, it's typically related to, I'll call it another party's conduct. Sit down and think about what is the number one outcome we want to achieve out of this, because again, it's not to say the outcomes are mutually exclusive, but I can't unring the fraud bell. If I find evidence that there's fraud, that's going to be an exclusion under that policy. But if what you're trying to do is just tick off that we've met the criteria for the policy and quantify the claim, there are obviously going to be some things I'm not going to go looking for.
That's really good. That's a very good point, Christine. Talk us through just briefly for the listeners what your investigation process, just so the service that you offer for investigations.
Yeah. So again, for me, it always starts with the what are you trying to achieve here? So a little bit of what's happened, but okay, so now what? What is your best outcome here? And so then the investigation depends on which of those outcomes it is. So just so I'm clear,
so would a client come to you to something's happened and they're just looking to you to investigate the very incident that's happened? Is that the case?
Yeah. So a typical example is we've got some sort of irregularity we've spotted in our accounts.
Yes.
There are these two things that should reconcile. We've figured out that they don't.
Okay.
And so as I said, my first question is, okay, well, there are a few possibilities here. Let's assume for a moment that someone has done the wrong thing. What would you, before we even get there, what would you want to do if I discover that?
Yes.
Right? I'm also thinking about, why are you investigating? Slightly related question, but sometimes, particularly for a larger entity, we might just be investigating because, it's consistent with our director's duties.
Yes.
For example, or we've got external obligations. We run a pharmacy. We've got external obligations to third parties to disclose irregularities. Again, the scope of that investigation is going to, again, be very different to, I want to claim under a policy or I want to send this person to jail.
Yes, very helpful advice.
So it's really about if what is it that you're trying to achieve here? Is it just to tick a box on compliance? And that's fine. But if it is, I'm going to provide a different service to you than someone that, I fundamentally believe in justice. If someone has done the wrong thing, I want to see them punished for that. That's a quite different investigation.
Yes. And typically it's similar for us in the legal sense, in that we'll meet with a client and that's we're dealing with strategy at the beginning and objectives at the beginning, because my golly, there's no point in working it out halfway through or towards the end. Typically though, in insurance cases, it is about payment of a sum of money. That's distinct from, say, a defamation case where it's about vindication of your reputation. But typically when we're dealing with these insurance disputes, isn't it, Jason? It's about a sum of money and what is payable pursuant to the terms of the policy. And that's where your helpful work, and we have to often explain to the policyholders that we do need to go and see forensic experts such as yourself, because we need to analyze, because the insurance company is going to require quite a great level of detail, aren't they, in relation to what your losses are in order to pay out, especially if you're seeking a much higher amount.
That's right. And quantum's so important. I think everyone, at the end of the day, it's sort of what's it going to cost? And it's one of those things that, everyone will have to, come to terms with, well, what is the quantum or the amount of money that is really at the core of this dispute.
To finish off, Christine, could you offer any advice to a listener that might be tuning in today who has been denied an insurance claim and they're weighing up whether or not to take it further or not, and they need some help with what it's all worth? What are we dealing with here? What's the quantum of this claim? What advice would you offer to that person?
Well, the first thing is to obviously have a good read of why the insurer has denied you. What is it about the evidence that you've put forward to support the claim so far that has the insurer unconvinced? And is your take on that evidence different? Right? Often it is.
Yes.
And then it's a question of, well, how different is it and why? And having a think about, well, what evidence do I have to support that? Because I'll actually say that's one of the biggest challenges for policyholders is I'll call it a belief that the world would have been different in some way.
Yes.
Yeah.
But if there are no documents that you can point to support that belief, that's probably a case where you're not going to persuade the insurers. So all of the examples I've given today have been, we can compare your performance to industry or your performance to someone else or your performance to your own history. If you've just got, trust me, we would have been the next big thing.
Yes.
That's where I can't help you, unfortunately, right? So as I said, kind of 2 steps. Why were you denied?
Yes.
And what documents do you have?
What evidence do you have? That's right. And where can you help then if they do have the evidence?
So then it's my job to work with the lawyers and present that in the most compelling way in insurer language as possible, right? So it's to put it all together, and we've talked about narrative a lot, but to put all of the pieces together then in a way that's most persuasive, that hits at all of the things the insurers' own experts are sitting there with their little checklist of,
exactly,
do we have this, do we have that? So it's about, obviously I've got to do some maths, but it's also about pulling that evidence together in the most compelling way.
Fantastic. That's very helpful advice, Christine. It's been
Thank you so much.
been
Very
really fun
insightful
having you.
Oh, thank you for having me.
Thank
Thank you.